Welcome back. You're watching Tokenomics. I'm Manisha Gupta, and we take the discussion ahead with Ashish Anand, founder and CEO at Whrrl Finance and Whrrl. Ashish, hi. We've understood all about tokenomics and how it works from Dilip, but you are working with a very important stakeholder, that is commodities and farmers. Do tell us on how tokenization has helped this sector. How much worth of commodities have been tokenized on your platform till time?
Sure. Thanks first of all, Manisha, for inviting me to this program. So talking about what we have been doing, so essentially we have been helping the farmer segment through tokenization, and while certainly there have been a lot of use cases which have been discussed, this is one use case which brings financial inclusion using tokenization directly to the homes and directly to the economics of the agriculture sector. So we tokenize the agri-commodities which are stored in warehouses, typically government warehouses, and we are running two platforms. In the TradFi side, we are running Whrrl. On the DeFi side, we are running Whrrl Finance. And actually, globally, this is the first example of one single protocol working on the both traditional finance and decentralized finance using tokenized real world assets. We are today globally the largest commodity tokenization players, and certainly in India, we are the largest tokenization players. We have tokenized more than 6,000 crore, almost $650 million worth of commodities which have been stored in warehouses. We have been doing this, much before RWA became so much popular in the crypto world. We started doing that way back in 2020, and during the COVID period, we have given loan of more than 100 crore rupee to the farmers on our platform against tokenized commodities, tokenized real world assets. And let me tell you that while globally the banks are still thinking, doing POC, pilots, etc. on tokenization, in India, banks on our platform are actually lending against tokenized real world assets. And they are lending to farmers using these tokens as a collateral. So that's what we have been doing, and we are actually now launching supply chain finance. We just partnered with MasterCard, and that will be again one of the first examples across the globe to bring credit card against tokenized real world assets. So those are certain plans which we are working on, and certainly DeFi is another angle which we have added.
Oh, absolutely. So, Ashish, when it comes to accessibility, affordability, and reaching to the last mile, you pretty much have done that. Tell us on what the challenges are in this space right now.
Oh, well, so the challenges, of course, have been quite a few. First challenge was to onboard the custodians, custodian warehouses where the agri-commodities could be deposited. The second challenge was, of course, to get the banks to come on board, because this was a new thing, lending against tokenized commodities. So that also took a lot of time, but thankfully now from the banking sector, we have got the credit line of 1,200 crore rupee. So that problem has been solved to a large extent. Another problem which we see is, and which we solved in a very novel way, that how do you explain something like this to a segment like farmer who might not be even digitally savvy or may not be having even a mobile phone. So that is one major challenge which has remained, but for that we have adopted certain measures. We have gone to the doorsteps of the farmers. We have taken the technology to them without telling them that, hey, this is something called NFT backing this. So that is something we are solving. The physical and the digital aspect of this is something which will remain to be solved over a period of time.
Oh, well, absolutely great numbers, Ashish. As you said, you're globally the biggest when it comes to commodity tokenization and loans to farmers as well. Many kudos to you. Congratulations. And we'll, of course, keep coming back to you for more on that. But let's also bring in Pranav Maheshwari. He's solutions architect at Edge and Node. Pranav, hi. Just so much being done in when it comes to tokenization. How would you look at, a lot of tokenization is underplayed right now. There are some credibility issues as well going into some of these companies. What is the way to look at this? What kind of transparency, credibility would one be watching out for?
Definitely. So first of all, like tokenization is something that more than India, the US Fed, as you were talking, is looking into. And in my opinion, for them, it's a very big advantage, because tokenization and real world asset are two things. One is tokenization of assets so that it is accessible. Even if you have $10, you can take a small part of $100 billion infrastructure piece or something. And the second thing is crypto, which is kind of something which makes things global, right? And what stable coins in the United States have done is that it has taken money from different parts of different countries, including Turkey and Argentina, where inflation is a very big problem, and converted those things to USDC. So people actually get their salary, convert them into USDC, USDT, so that they can, play around inflation. And at the end, the US Treasury and the US bonds are the ones which are benefited, because Circle and Tether invest in the US economy so that they can maintain their 1:1 peg. Now, coming to the tokenization of this, US Treasury bill is the third step towards United States dollarization of cryptocurrency and in general, real world asset. What happens is that United States Treasury bills, or the T-bonds, are the ones which, many organizations like MakerDAO and Centrifuge are actually focusing into. And what they have done is that they have taken the US T-bonds, as collateral, and have issued tokens on top of that. What it means is that a person living in Turkey, a person living in Argentina, which cannot, as of now, could have accessed the United States Treasury bonds, can now go and access those kind of security options, which makes United States in a way very much likelihood a place for keeping assets. On the other hand, for people and citizens like Argentina and Turkey, where inflation is a very big problem, to also get exposed to the US Treasury bill, plus get a 5% interest on their USDC and USDT, which they have kept, which around right now is at a market cap of about $100 billion. So this tokenization industry, in a lot of financial manners, not just non-financial, with Dilip ji figured out, is in a bigger state, because now you have such big capital and such big capitalistic country, and everything is being tokenized for everybody other than the United States citizens.
Oh, well, absolutely. So, Pranav, when it comes to common people, normal people, before we start getting into this, what do you think are the technological, operational, logistical challenges to solve?
Definitely. So the real world asset, first of all, is the newest class in the Web3 economy, right? And this is the first time we are taking off-chain stuff, which is like, the infrastructure which does not happen on the blockchain. Infrastructure is in the real world. Or something like United States Treasury bills, which are not at all on-chain. They are rather legal commodity options in a way, right? Similarly, other paintings and Shipfinex doing ships. All these are real world assets. How do you keep these real world assets on-chain is a very big problem. And there are few organizations like Centrifuge trying to solve for that, but there are always middlemen in between. When we call Web3 and blockchain as permissionless, and Ethereum and other such blockchains permissionless, when anybody can list tokens and start trading on it without much of a regulatory overburden, in real world asset, that's not the case, because you are dealing with real world things which come under jurisdiction of that particular country. So how do you put those off-chain entities and assets on-chain is a very big question to tackle for real-world asset classes and real-world asset program managers and projects. And that's something that some projects are trying to solve right now with the blockchain oracles, with Chainlink and Redstone. And few are putting and complying some of their legal staff to do something like a Web 2.5 kind of a condition, in which real world assets will have legal compliance docs that will be converted into NFTs. And those NFTs will be put into liquidity pools to tokenize everything. So this is like, a kind of a, what I can say is a kind of a compromise on the Web3 standards of real world assets to make tokenization. But again, this is a very up and coming field, and we have just seen a good amount of interest by different mainstream protocols in Web3 like Synthetics and MakerDAO coming into the picture. So we'll still have to figure out and find out good infrastructure so that we can onboard the off-chain entities to on-chain. But again, this is coming and will go through, and as well as get some regulation going around. So should be solvable, but yeah, as of now is a problem.
All right. Pranav, thank you so much for joining us. Well, so much to do and so much to learn in this space, and so much to watch out for as well. With that, we've come to the end of this episode of Tokenomics. Thank you so much for watching.